Happy new financial year. We're now looking at Gary Glover's weekly report, which has got something that we've become used to at the start of the financial year, looking at the dogs of the Dow theory applied to the ASX. The companies that have underperformed last financial year have a habit of becoming some of the best performers at the start of the new financial year. Plus, we're also getting the regular insights as to his interpretation of where the indices are and what the technical analysis is telling us. Good morning, Gary. How are you?
Morning, Chris. Yeah, on this cool morning. I think it's cool across Australia. Actually, no, pretty. I think Wednesday morning is going to be the coldest one. Actually, like for a lot of places there. So, yeah.
Well, staying warm. I'm rugged up here, got the heater on, and pretty keen to look at your reports actually, because this is something you've looked at for quite some time. It might be bad to say the number of years because it tells us a time in the industry. But what's been your experience with looking at these performances of ASX, say, top 300 companies, the underperformers, and then the new year, and how that works?
Yeah, well, I guess we'll sort of talk about it. The momentum stocks there is that, like, a lot of the ones that have been running, well, tend to have sort of, definitely sort of stayed the course there. And those sort of stocks that have been underwater there, the foot sort of stays on the throat, unfortunately, until the end of financial year. So just, it's funny because we're obviously looking at the 30 momentum stocks there on Friday, Chris, but I noticed they were pretty much most of them were all showing really strong strength on June 30. So, like, not only was no one selling them, but more people were buying them. So I think probably 80% of the stocks that we were sort of been following showing the most amount of strength. We're just finishing unbelievably strong there. And those weaker names on the year-on-year returns there, they were definitely, I think 80% of those were basically probably down into June 30 as well. So a few of them sort of bounced from a couple of days beforehand there, but then the foot was back in but basically they were sort of back down June 30 sort of on the knees again there. So, but we often do see a bit of a tax selling as that sort of keeps the foot on the throat, keeps that negative momentum there. And I think in the past there we've seen some of those sort of bigger sort of negative returns have, I'd say like 8 out of 10 sort of have had a pretty good, week or a first month sort of out of the, they don't often always go on. There's still a few names that don't do well. But yeah, some of the dogs of the Dow theory there is that, some of those sort of better companies, they're typically the companies with yields, with companies that sort of pay a reasonable dividend yield. They're the ones that often have the most amount of chance of recovery there. The ones with obviously without any yield there or not having earnings, not paying dividends, they're a little bit more riskier as well. But, I often sort of just, part of it's sort of, a bit of fun to look at the names and, but there's also a few opportunities there as well. So yeah, it's pretty worth looking at that. I think a month ago, Chris, I think the portfolio's up 15%. I said I'd probably time to bank and shut it down for the year. That would have been probably a good decision. But yeah, it's been a little soft into the end of the year here. So even the last day was a little bit soft for some reason. So I was expecting the market to get marked up, quite nicely there. But yeah, I think with the index up 8.5% there, maybe some fund managers will probably be happy with a 8.5 to 10.5% sort of performance for the year. So, but yeah, I guess the overall market's looking, had a pretty good run there. So I think a lot of those indices are looking a bit extended here.
Well, that's a good point to probably, you've got the charts here, you've got the NASDAQ, and it looks like it's tried to shoot higher but failed to close there.
Yeah.
How do you take that now?
It's pretty interesting, really. If you actually look under the hood, so you've seen like the video's had a cracking run in there. It's actually had 3 pretty strong distribution days down, come off quite a bit, then bounced sort of 3 days on what we sort of call lighter volume, and then sort of started to fade again. So definitely some signs of selling there from the video. But at the same time there, Chris, we're seeing like, I think Apple, Amazon, Microsoft, on Google, I think there's a few other companies as well, even Tesla, they've all been breaking out on the upside while all the chip names have been actually running off here. So we're seeing some healthcare names obviously pop here. seen some infrastructure stocks overseas have a bit of a pop. So definitely looks like there's some rotation going on in states there, and probably similar to our market as well here. So those are actually pretty healthy signs. So that's what you'd normally sort of see in a bullish sort of phase there, is that you just see the rotation sector to sector there. So yes, even though the video looks a bit volatile here, definitely seeing lots of other stocks breaking out that have sort of been, maybe had that sort of coil sort of phase of consolidation there. But yeah, so that, I think that's sort of constructed there. That's why I think this will be a mild pullback. Nothing sort of too heavy there. And as just the election years, you just don't get big corrections there, as we've sort of mentioned. We've talked about it all year. We might have had a little, something in the first half there, but nothing larger than 8% normally. That's what we sort of got in the NASDAQ, was at 8% on the dot almost. But yeah, the correction is pretty mild, so I just don't see any sort of corrections there. I think sort of maybe August and October, probably 2 months to look for maybe a little bit of mild weakness there. But often sort of, generally election years finish the year pretty strong. So I think any pullback is going to be mild.
Okay, so that's definitely NASDAQ with all the chip tech companies that you just mentioned. The S&P 500 still showing a similar sense that it's broken out beyond this trend line, this long-term trend line that you sort of shown here. It's popped out to the top end, and there's a bit of, you've got sort of a wedge happening in here.
Yeah.
And still broke out to the upside. So is that sort of a cause for concern, or maybe just an indication that it might cool off to the lower side again, or how do you?
Yeah, look, it's just an old trend line there. Look at, sort of like it has traded above that previously and then sort of come off again. But now we're sort of back above it here, just kind of riding along it there. There's no reason why we can't just sort of just ride along the upside there, Chris, as well. So I'd just be, sometimes you can do these really upward consolidations there. Just go back and look at that sort of 21, 22 period there where the market was pretty strong. It just sort of sat high in the range the whole time up there, so can get that sort of upward consolidation there going through there. And that's often what we do see in election years as well, is that, you do see it sort of ride the crest. You see a few little consolidations there, a few little cool-offs there, but just don't see any big corrections there. So that sort of 21, 22, that might be a little bit, that's the type of activity we're probably likely to see here until the end of the year, I think.
Okay, so that's the S&P 500. Aussie, slightly different market. You've talked about it before.
Yeah.
Moving rotations, possibly the miners stepping in, taking over, the banks changing guard. That sort of rotation could happen. We are heavily weighted to the materials and mining sector, especially in comparison to the two indices you just pointed out. So it is possible that the wide breadth of the miners could just have a smaller gain against maybe a relatively larger pullback of the banks, and they null each other out or even mildly go up. So is that still on the cards for the Aussie?
Yes, I mean, seeing those iron ore sort of stocks, obviously the big there, Rio, Fortescue, BHP, all kind of had big corrections there. Seeing, the uranium names, they've all cooled off, pulled back. Gold names have sort of probably not had a deep pullback, but definitely had a pullback and a congestion there. Even the coal names as well have been sort of, that's come through a bit of consolidation. Seeing the coals just sort of popped here in the last few days. BHP is sort of holding that sort of 42.50 zone. And, my sort of favourites there, the oil stocks there, they're sort of starting to kick up as well here. So so far we've just seen here on our index, every time the market sort of sold off that sort of 200 or 300 points, it's been met by some pretty strong sort of buying there. So definitely sort of, signs of buying the dips there so far on our index. And the whole thing is sort of tightening up. And, if you think about the Nikkei broke out one of the first indices there. I think it ran for about 4 weeks, and it consolidated for about 12. Came back and sort of sat on the high, and then it sort of went again. So we're kind of running a little behind everyone else here, but the price action is pretty constructive there. We're sort of sitting, still on top of this sort of high there, consolidating above that. Pretty constructive there. I guess the one thing I look at there is that, if you move impulsively up into a consolidation there, you're generally going to move in most instances in the direction of the trend here, which is impulsively up here. That's what the odds favour there. So look, it can break down. So you got to be prepared for the downward break here. I mean, that no doubt the NASDAQ and S&P are a bit extended there. So look, if I'm wrong here, maybe they pull back here. So we could get a downward break here, but so far we're just seeing pretty strong support here for our index there on any sort of on any sort of pullbacks there. I've seen plenty of sectors sort of rotate down. We've seen health has had a pretty deep correction, and they've sort of seen some signs of bouncing up there. We've seen some of the biotech names as well, Chris, that sort of come up on relative strength as well. Just seeing some different sectors sort of starting to sort of come on here. So I think the fact that this materials across the board have actually come back and the index is held pretty tight here is a pretty constructive sign here. So this means things like the banks that I think are a bit pricey or very pricey, if they had a bit of a sideways or a bit of a slow sort of correction here, then all the other sectors can do a bit of heavy lifting and push their index still higher there, even though that sector might go up there. That's normal to see that rotation as well. So I still think the market looks pretty healthy.
Okay, well, the market's healthy in the Aussie, and you're talking about all those different layers within the indices. Sure, that will show through in a second when we look at the top companies on the ASX that you've put into the report or the ones that have caught your eye this week. Quickly before we do, the Dow Jones, the Oxford indices, 30 large industrial companies in the US. The chart looks slightly different to the S&P 500 and NASDAQ, obviously so because the constituents are in different industries. But we are election year, like you said. We tend to close higher in the end of an election year. Is that outlook still similar for the Dow Jones, or is it sitting in a slightly different camp to the other US indices?
It's kind of sort of been more sort of following the awards and some degree, so almost the old sort of style, the old value sort of stocks there. So a little different from the NASDAQ and the S&P there. It's sort of been going up the last few weeks, while they're sort of showing signs of sort of cooling there. So look, I'm a bit neutral here. I still think, it kind of remains pretty positive there. Just whether, does this sort of slide off here to go to a margin year low and then rally, or do we just get a little sideways consolidation and push higher here? I still think this is, again, similar to that 21 period there for the market there, but that did sort of overlap new highs in there as well. So, once it sort of got to late 21 there was a little bit of overlapping going on there. So, you could get a bit of that type of activity here into year end. So, so a bit neutral overall there, but I still think these things can sort of trade higher here in the year end.
Okay, well, now we move into the specifics of individual companies. Woodside, very large Australian company, energy focused. You did touch on how the energies have been trading recently. This is a chart you've brought up a few times before. So is it the chart that's bringing it up, or is it the underperformance into the financial year, or you kind of a bit of both? How do you see it?
Look, I think the 27 is a big key level. So I'm just saying the sort of, particularly sort of looking at some of the weekly sort of setups there, just, we're seeing pretty sort of choppy type of markets there, fairly, big moves sort of sector by sector. But this thing, I'm just sort of finding that those sort of, those big Fibonacci levels, whether the 50 or the 38 or the 61, they're having sort of a lot more relevance in this market at the moment. So it's a big level of 27. Showing some sort of support there. We did get a little bit of a false breakdown there, Chris. We saw signs of accumulation taking place in big volume there. Price did tighten up a little bit of a VCP as well. So just sort of saw a lot of technical signs there that we could be, breaking out there. So, we've got, obviously we look at those levels, but then we've got to see some evidence that it's sort of on the daily, on the shorter time frames there that we're sort of seeing that. So I think it looks pretty constructive here so far. Last week was obviously a pretty good week there. Had almost like an outside week, pretty impulsive, good volume. And we're sort of starting to break some of those sort of daily swing highs as well. I like to sort of see that one swing high get broken. If we see two swing highs on the daily get broken, that's a really good sign there. So we definitely have broken two now. So it just reminds me, very similar to that sort of 21 pullback and tightened up, and that had a really strong bounce out of that low. So we get sort of half that sort of type of move, I'll be pretty happy here. But I just think this looks pretty positive there. So I think this goes to at least sort of 30-10 as a minimum there, but I think probably, I think there's more chance of going back up to that old high there. Yeah. Oftentimes, how you sort of trade into a low, you might trade out the same sort of way here. So maybe we'll get a, rally up to 31 and maybe edge back to 30 and then push on to 33 or something like that. So, but yeah, overall looks very constructive to me.
That's good insights from Woodside, and hopefully that kind of a fold back technique that you talked about before. Staying within energy, large caps, Santos, again, this is one that you've looked at for a little while. How's the chart update been, not just for Santos, but in the context of what you've seen with the market in the last week?
Oh, it's just the stock, stock is sort of showing relative strength there, Chris. What I mean by that is it's just struggling to go down. So we had the energy sector was down, so all the materials sort of sector were down here, but Santos has just really gone, it's gone a little bit down here, but really that's really a larger sort of sideways move here for the last sort of 10, 11 weeks there. So struggling to get sold off there. It's held up really tight there. When I look at my sort of weeklies, even my monthly trends there, just really holding tight here. It's sort of showing that relative strength versus the sector, versus the market, versus, it sort of pairs there. So I just think it leaves at a really strong position there. Has sort of just broken out of this little tighten pattern as well. So, it's very constructive. The volume's pretty healthy there. I think that breaks that little swing high there in April. I think this can go on, not just a small move here. I think it can really sort of motor action. I think, no reason why I can't go back to sort of $10 here over the next sort of 6 months there. I think if it really powers through that high there. So I think overall looks pretty constructive.
So moving from Santos into PLS, still in the mining and materials, mineral space, but going from energy to a different type of energy or energy storage, lithium. How's this? Is it the Fibonacci sort of holding up for you? Is it the sector in itself?
It doesn't look so pretty on that weekly chart there, but on the daily there, we did come down to a new low, and then we got a bit of a bounce, a bit of a high volume, sort of activity there. We did have a bit of a bounce off that low, come back and done a bit of a retest there without cracking the low here. But yeah, it does need to sort of hold here. So, doesn't look so pretty here, but oftentimes it's sort of when you go to that new low and you get like a false break or a margin new low, you reverse here, you can get a sort of fast move in the other direction there. So did see a bit of a false break there a while back there. Did do a little bit of building for it, had a bit of a move there, but yeah, just wanted to watch closely here. I think definitely needs to hold this low here. Don't want to sort of see it break below the current daily low. But yeah, I think that, just when you see that volume there, you've just got signs of possible accumulation there at the new low. So this is what I'm sort of watching sort of closely. I've got a little starting parcel there, but if it cracks below the low there, then I'll be straight out.
Well, it's lithium, and we know that when you're looking at the strength and relative strength, the best performing companies, your research has shown that they can move together in their groups. So you're looking at PLS here. You've said the daily chart is slightly better. Liontown Resources, you've got the weekly chart once again in a similar space. The chart is showing that it has been in a downtrend. But are we possibly seeing a similar thing here where it's coming down, trying to undercut the low, but it may actually just quickly touch under it, false break, and then maintain it? Is that what you're looking for here?
That's right, yeah. So basically sort of needs to sort of hold that low, and then show some sort of reversal on there. I guess the beauty of the false break is this is sort of where the trend can sort of change there. In the past, when I've seen a move like that, Chris, it's sort of come off like 6 weeks kind of aggressively. So in the past I thought, oh, that's not a good sign. I prefer to sort of see it meander down there, retest there. But in my sort of testing of the false breaks and sort of starting to build a library of them, I've actually found some of the better ones actually have come off hard like this into the low. I think it was an aristocrat ALL did something similar, and I sort of, it spooked me, didn't trade it, and the thing just ripped afterwards. So some sort of lessons there. So I've sort of seen a few of them they can come off impulsively like this, but if you notice that volume was pretty light off the sell initially, but the volume only really picked up as we got down under $1 here. So big volume there has come in sort of at the lower levels there. So that can be sort of a sign of accumulation, those lower price levels as well. So see it's in a trading hold here actually, regardless of some funding there. So it's going to be pretty interesting to sort of see where they can actually hold here, by the end of this week here. But we have seen some sort of sharp reversals from this type of setup there. So just needs to sort of hold that low in place, in my opinion.
Okay, well, if we move out of the lithium space and have a look at Fletcher building, a different sector in itself, but this looks like a longer term downtrend. We've got the weekly, we're showing all the way down here, a bit of sort of sideways movement, and then fell out the bottom end, tried to get back into it, failed, and fell down harder and faster. It's a bit of a drop, possibly edging out a false break in itself down here. But the volume profile is significantly higher, obviously a lower share price, but
that's what's catching my eye there, Chris, is that chunky volume there over the last 6 weeks. So basically, you've sort of you've sort of fallen to a pretty deep low, sort of a new low, and then we've seen big volume there for sort of 4 weeks. Come back and retested the low, sort of seen volume up again. So got a potential little small bounce off the low there, big volume retest of the low. Did finish off the lows there on Friday, and it's funny, like the New Zealand economy, that they've had rates much higher for longer here, so that's definitely had an impact on GDP and just on the general economy there. But unlike Australia, there they do have, they've got their inflation well under control and heading in the right direction, whereas we don't. We instead, where government's handing out more money. But I mean, how's inflation going to go down, Chris, if we've just given the builders a 20% pay rise? I mean, sorry. I mean, we're laughing about it, but it's just, if the labour cost to build a house is about 20%, how's that going to mean prices lower?
I haven't figured that one out yet, but apparently, if we listen to what's happening in Federal Parliament in Canberra, this is different. So that old saying, it's different this time. Yeah. But sorry, we'll put the political jokes aside. Yes. So in New Zealand, we've got a handle on it. And how are you interpreting that chart? What can happen from here with their insights on interest rates, inflation, and possibly turning the ship around?
Yeah, I think look, the New Zealand government is, I think he's, look, at least it's handling inflation better. Whether it's, probably you can argue that he hasn't managed the economy better because obviously he put the foot down. But what happens longer term here will be, will be judged by both, I guess. Maybe in Australia here, not lifting rates is, maybe we're going to miraculously come out of this without any inflationary issues. But let's see. But I think this stock here has come back a long way. It's a pretty reasonably sort of Fletcher building in the past had been a pretty strong sort of company there. But I guess some of the builders have kind of a bit of pressure there. Not saying Lendlease is a good benchmark there, because Lendlease has been pretty poorly managed for quite a long time, whereas Fletcher's probably only just had a few issues here in the last probably 12 months, and that's probably because of the sort of softer New Zealand economy as well. But definitely think this is sort of one to have a look at there, sort of one of the bigger down movers in terms of percentage there. I think there is normally a bit of yield, probably trades on low multiple as well. So I think the market's always sort of forward looking too. So if New Zealand starts sort of cutting rates here, later in the year or early next year, then I'll start to look at what stocks are going to benefit from that as well. So the immigration policy there in New Zealand too has been a bit negative as well. So if that changes as well, that's sort of something which could be good for building as well. So just a few things that have been negative for Fletcher there. So but yeah, just wanted to sort of keep an eye on there. I think that's definitely a deep pullback there, possible little false break there. But just one of the better companies I think. It's been sort of came pretty hard here. So
okay, so is that kind of fitting into the Dogs of the Dow criteria in a sense that it's had the foot on the throat, been a hard sell for this financial year? Look at that, peak to trough, pretty much the high was at the start of the financial year, the lowest end of the financial year. Is it one of those possible candidates for an about face?
Yeah, it's, I mean, sort of, I remember that, I think Telstra was up about 40% there one of the years, and then the following year it was up like 25, 30%. It went from sort of being one of the worst performance, one year to then, yeah. So this is sort of what I consider to be a quality company sort of trading on its knees at the moment. And I think if you look forward to, there's some things that can change in New Zealand then which could benefit this company, external. So I like to look at, I think sometimes you'll see, if the performance is sort of coming from external, like if it's, I guess like a ResMed there has done nothing wrong. It's just we've had these weight loss drugs. We've had external issues which have affected that company. So oftentimes you buy good companies that are still doing good things, but when external issues affect them, and that's what you're looking for, So like I think like travel stocks are a classic example. Like everyone sort of got them priced pretty low here. I think corporate travel, Flight Centre and Hello World, they're still trading substantially under their normal, what you'd sort of say would be an average PE for them. They would normally trade on multiples, almost double here or at least 50% higher normally on average. So for some reason the market sort of got them discounted here thinking that people aren't going to travel, obviously higher cost living here. But we saw that the market thought the same thing about retail stocks in 23 as well. Chris thought, they'd struggle here, the economy's going to struggle. And didn't really eventuate here. I don't know. I'm just not sure the family holidays of this is what people are going to give up. But I haven't seen that. Travel was still pretty robust there. The travel's actually coming down because obviously we've had that early gouging, sort of from the travel companies charging a premium. But the prices will come off a little bit. They're slightly cheaper to travel. I still think people are going to travel here. So, so I still think that's a pretty interesting area as well. But yeah, there's some pretty, some reasonable companies there that have come off pretty hard there. I think, Credit Corp's sort of one that, the cycle changed for as well. So, corporate travel, I think all the travel companies are very cheap here. So if you look at sort of valuation wise there are some interesting companies there where external, forces could change for them as well. So,
I'm to get ahead of ourselves. I'll let you finish the two other charts before I quiz you on the best of the dogs of the Dow. So that's
if you jump to that sort of Ansel there, that's probably obviously very different from very, very different from the earlier chart there. This is one shot that actually is sort of showing strength there. So sort of struggling to go down there, seems to be sort of pushing up there. Is a sector that's sort of starting to show signs of recovery there, healthcare names there. This has actually sort of been pushing up here, breaking higher there as the years gone on there. So this looks pretty robust to me. They did sort of have to shut down their Russian facility. So things seems to be on the mend there. So this is one of those sort of older names there. I think it's looks pretty robust and it's still on a pretty reasonable multiple here as well, Chris. So price action, there's some value there, and the price action is sort of on as well. That's showing strength there. So I think technically looks like it might be able to go back and retest that $30 level there. So kind of reminds me a bit like A2 milk there, sort of when we sort of margin year high, margin year low, then we go back to the margin year high again. So this looks like it's sort of heading towards $30 to me.
That's a good move for Ansel if it can happen, and love that you're saying the relative strength and it's struggling to go down, because in your assessments and a great video that you've had that we'll have in the notes below, you look at the Magnificent Seven, 7 of Australia's best companies in the last 12 months and their behaviours. That sounds very similar for where their run started. And also your insights into the best traders in the world and the approaches, the stocks that get them to be their best trades, similar setups. Now, just the last one of the charts for the week. You've got Hello World. You did mention just earlier how the travel companies could be behaving. You've seen this a fair few times in the charts that you've set up, not necessarily the ABC, but coming down to retest the low and getting up below it. So spring, false break. But does this ABC change how you're seeing Hello World in that context and what you're looking from it right now?
Yeah, look, you've got a larger sort of sideways sort of trend here for a while there. Obviously, with travel's had its issues, throughout COVID. But obviously now we're sort of starting to come out of COVID there. It's still sort of caught in a bit of a range here. what I do like is we do have like an ABC, that's the sort of most common pullback, and that's just a marginal new low as well. So did see like a little false break here. We saw a little bit of volume come in at that low as well, which is good signs there. Definitely some value there, Chris, as well. I mean, trading at about 10 times here, and that's basically with earnings set to jump quite a bit this year. And the yield's about 5% here for the stock here, fully franked. If you look at 25 numbers there, I think sort of about 20% growth expected in 25. So the PE is around about 8 times, the 25 earnings sort of consensus. So definitely a lot of value there. I think Molly trades around about 16 to 18 times if you look at the historical average for this company. So, not expensive here. Good technical pattern there as well. So the fundamentals and the technicals definitely aligned here. So it does look quite good here. So definitely sort of one to be having a close look at there, in my opinion there. Look, it's a market there with sort of the fundamentals haven't been really driving this market. So like momentum has been driving this market for a lot of stocks, obviously. So valuations can get a little bit zany at times. So definitely plenty of stocks I think look pretty overvalued there. So plenty of stocks that I think look really undervalued as well. So bit of a trader's market there, but that's often the case in those sort of high inflationary sort of periods there. We saw the 40s and 70s there where we saw, some pretty big movements within the indices and the stocks throughout those periods. But you did see that larger sort of sideways orientation as well. So that'll make it interesting if you're, does good for the traders, I think, anyway. So, yeah.
Well, just before we move into the table, I want to just have a quick note on this chart, Hello World, like we did before. The high was back here, so not quite in July, but they have bounced around a bit, but definitely closed down right near their lows. Slightly off it, but very close to it. So they started the financial year, sort of mid-range, got up to the highs, but then had a fair bit of one-way traffic, if we summarise it, down towards their lows. So I know that Hello World here, you looked at the chart, you put it in this week's report, but on the tax selling, we've got it in here. So,
and you look at that chart, Chris, too. If you actually go and click on the end of year periods for each of those. You can see there that actually we've sort of got like a July low, another July low, another July low, and another July low. So we've definitely got some seasonality in this stock here into July as well. Literally, as you were sort of talking about that, I was just looking at just July. So I'm like, yeah. So like there's a lot of stocks do have seasonality about them there. So so that's pretty interesting. So, yeah.
Well, we are at the start of July, start of financial year 2025. Yeah. You have done the numbers on some of the worst performers, but not just the worst performers that have decent management and also yield and fit with some decent fundamentals. So that leads us into this sort of list here, doesn't it?
Yeah, so I always like to look at sort of what stocks were up the most there. So, look, there's a lot, between the sort of 300 and the All Ords there, there's a lot of names in there. I just sort of tried to sort of pick some reasonable names there. I didn't sort of follow the dogs of the Dow there. I did sort of like Hello World, corporate, Credit Corp, I think ACL, Cromwell, CTD. So the first 5 are definitely sort of, that sort of dogs of the Dow sort of stuff there, that they're all sort of punting a yield there. I think Fletcher as well. And then your Pilbara, I think your Helios, 29 Metals there, SSR, Liontown, Patriot, those ones there are probably not paying a yield. The only other one there is IGO, typically does pay a yield in the past, though it hasn't in recent figures as well. So that maybe kind of rules it out a little bit. But there's just some big decliners there as well. So obviously we've got a few lithium names in there. They've come under pressure there. A few travel names in there as well. And a few other sort of companies as well that are just sort of stuff in here. So I just went through and thought, those are probably some of the better looking names there. And also I looked at the charts as well, Chris. I like to sort of see how deep they've come back there, whether there's any sort of signs of it, I look for that sort of accumulation signs as well. So they've come back in a 3-wave manner or a 5-wave manner, and they're coming back and retested old lows or gone to new lows there. And if I see like an elevation in volume there, what I view to be sort of accumulation type volume there, then those are the things that come back there. And I think 29M and SSR have had a few issues with the companies in 23, 24. So SSR's had a bit of a tragedy there, and the 29M had a lot of flooding in Queensland there, which disrupted them as well. So they've got potential to bounce back just because they had a bounce there, which again sort of outside of their control. So yeah, that's the way I look at it. I think the last two there, PMT and Paradigm there, they've been beaten up pretty bad there. So sort of newer names there. Might be able to bounce back there, but those are probably two of the riskiest ones as well. So the dirty dozen above them would probably be the better companies to be looking at, in my opinion, amongst the sort of worst beaten down ones. But yeah, if you like a bit more speculation now, I think the bottom two have probably got potential to bounce back, maybe the most there, because I've been beaten down pretty ugly, but definitely the riskiest as well. So, but yeah.
Yeah, well, they're the insights that we'd love to see from you, because you've taken your own approach to what's a familiar name, but you've changed it for the Australian market, the Australian perspective, and taking into account what's happening in the momentum side of things, where the best trading opportunities are right now, and the dynamics of the shifts in tides of moving of leading thematics to the underlying thematics. Are there any other insights that you want to share with us, Gary?
No, what we do is we might sort of just try and follow those 14 names here over the next, probably next week, next month, maybe next quarter, just see how they perform there. I think it's just, it's an interesting exercise there, because you do sort of see, and we'll try and on the 30-30 list, Chris, as well, we might look at some of those stronger names, see how they go over the next month as well, because I'm curious sort of thinking that, some of those sort of small to mid caps there that are sort of, that have had the rip roaring runs there, maybe they might get sold post June 30. So start looking at some of those, because there's been some incredible moves there, like that, the Spartan obviously is sort of one that comes to mind there, FND as well, so there's a few names there that have really had some crazy upward moves. Just wonder whether they get some profit taking some of those sort of names come in. But yeah, we'll look forward to it. It's going to be a pretty tricky year ahead, I think. I think it's going to be sort of choppy, but an upward chop into the end of the year. And then I do have some concerns about the first half next year as well. So I think that might be a little negative for 6 months of next year. So we might be looking at a bit more protection, after the Christmas rally, I think. So I think it'll, potentially the market sort of keeps running through till December there, and I think it'll be batten down the hatches for the first half of next year, which will be unusual, because if anyone sort of studies the 10-year cycle, the fifth year is termed the year of extension, and up until about might have been 05 there, I think there wasn't a negative fifth year in the history of the markets. So it's always been, and it's the average is around double every other year in terms of performance. But cycles are saying a little bit different there. So maybe the first half was pretty negative, and then maybe bounce back positive in the second half. So, but yeah, it'll be going to be next year's going to be super interesting actually. So but hopefully we just sort of keep churning higher here until the end of the year. And, I think just following the sectors is probably the key thing here.
Nice. Well, they're the insights that we'll take from it. Gary's mentioned the 30-30 report, where he's looking at leading momentum. We'll put it on screen, a link to that whole series where Gary talks about the leading momentum stocks every single week. Thank you, Gary Glover from Novus Capital.
Thanks, Chris.